You might not know this, but the VA does not have loan limits. So why did they just update their loan limits for 2024? Hey everyone, it's Sam Fikel at Sam Fikel Home Lending. Today is Friday, December 27th, 2023. It is the last business day of the entire year. And starting on Tuesday, because Monday is the new year, starting on Tuesday, we're going to see updated loan limits for VA, FHA, and conventional loan programs. You might have seen my videos in the past that talk about how VA does not have a loan limit. If you have full entitlement, you can get whatever amount you can qualify for. I was talking to an appraiser a couple years ago who had just finished appraising a $4 million house with no down payment, no mortgage insurance out in Virginia. It's a pretty awesome opportunity for that veteran to be able to keep that down payment for other investments and opportunities. So why is there a loan limit? The loan limit comes into play when you're using your VA loan multiple times at the same time. So if you purchase a property with a VA loan, and then you sell that property and purchase your next one, your entitlement gets restored when you sell it, and then you've got full entitlement for the next one, so you can keep buying your $1 million properties if you want. The way that the limit comes into play is if you keep one of those properties as a rental. Now, to be very clear, you cannot use the VA loan to purchase investment properties. You have to occupy it as a primary residence. However, if you move on from that property that you occupy as a primary residence, then you can keep that property as a rental. This is exactly what I did earlier this year. I bought my first house 5 years ago. No down payment, no mortgage insurance, awesome rate. 4.5 years later, my wife and I, we've got our next kid on the way, our second kid, and we've outgrown the first house, so we needed to purchase another one. I kept the first one as a rental. I'm earning cash flow from it, and our next one is a nicer, bigger house. Now, how is this possible? Every year, the Federal Housing Finance Administration, or FHFA, comes out with new loan limits. Now, FHFA oversees the conventional loan agencies, Fannie Mae and Freddie Mac. These are government-sponsored enterprises that set the maximum loan limit for how much they'll purchase from lenders. Essentially, what that means is any loan amount, not purchase price, any loan amount above that amount has to be a jumbo loan. And that becomes a completely different ballpark, a completely different beast of a loan program. In order to get an agency conventional loan, a conforming conventional loan, the loan amount has to be under this limit. For 2024, that limit is $766,250. This is up from 2023's limit of $726,200. Now, that doesn't really matter to veterans a whole lot unless you're trying to keep your current home as a rental and purchase your next one. Like I said before, if you sell the house, then your entitlement gets restored and you can move on to your next one with full entitlement. But here's how it works to stay under this loan limit if you want to keep multiple properties as rentals. In really simple terms, the loan limit is the amount that you can finance between all of your properties. So for example, this year, the limit is $766, right? If you purchased your first property for $300,000, that means that you can purchase your next property for $466,000 and not need a down payment. Now, what happens if you do need a more expensive house than the limit? Basically, the VA needs you to replace their 25% guarantee to the lenders. That's the reason why you don't need a down payment and no mortgage insurance on VA loans, is because the VA guarantees lenders to 25% of the loan amount, only up to that loan limit. So you just need to replace that guarantee above and beyond that amount. So here's how that works. Say you have a $300,000 house and you want to keep it as a rental, you don't want to sell it, and you want to purchase a $500,000 house instead of $466,000. See, that's $34,000 more than the limit. All you need to do is provide a 25% down payment to replace the VA's guarantee, provide a 25% down payment for the difference between that cumulative $766,000 and $800,000. So 25% of that $34,000 is about $8,500. Now, obviously, I'm rounding numbers here. The limit is $766,250, right? But I'm keeping things simple here. It's worth noting that the limits do increase for multifamily properties. If you're buying a duplex or a tri or a quadplex, and if you're in a high-cost area. I'm in Washington State, and so the high-cost counties in Washington are King County, Snohomish County, and Pierce County. If you are wanting to purchase, say, a quadplex in Seattle, you can do that with like 2 what is it, like $2.5 million or something like that? Again, the only time that this is really going to affect you is if you're trying to purchase a home and you want to keep your current home that you purchased with a VA loan as a rental. Another thing that a lot of people don't realize is that refinancing out of your VA loan into conventional doesn't restore your entitlement. I'm going to say that again. Refinancing from VA to conventional does not restore your entitlement unless you do something called a one-time restoration. I learned this the hard way because the home that I bought with my VA loan, I refinanced to conventional so I could hopefully free up entitlement so I could purchase another house. Come to find out, the entitlement stays with the house. For VA entitlement to be restored, both the loan has to be paid off and the house has to be sold. And so this is really important for people to realize because you might be refinancing for no reason. If you're trying to purchase a big house with VA and avoid the down payment, refinancing to conventional and pulling that trick is not going to work. Also, if you are assuming a VA loan, like if somebody has a house for sale, they've got a super low 2% interest rate and they're offering it as an assumption, which is exactly how I bought my second house. The person that's taking over that loan either needs to be a veteran and substitute their entitlement, or else the seller will not have their entitlement restored. So even though they sold the house, since the loan wasn't paid off and the entitlement wasn't substituted by the buyer, the entitlement stays wrapped up in the property. So the veteran seller doesn't get their entitlement restored if they sell their house as an assumable loan to a non-veteran who's not substituting their entitlement. There's a lot of details that I just said there, but I went through it myself. If you have any questions about the assumable process, purchasing multiple homes with the VA loan, or any other aspect of VA, I do about 75% of my business is VA loans. So I'm happy to help you. Make sure you like this video and hit that subscribe button to see more from me.